get the markets update now. The local index expected to gain further amid some optimism around the Russia-Ukraine peace talks. Russia has said it will withdraw its forces from parts of Ukraine, which has raised hopes of an end to the war. Jimmy Moyaha, independent analyst, joining us now for an update on the latest market moves. Jimmy, good morning to you. How has the JSE opened this morning in early trade after tracking firmer global markets in the previous session?
Morning, Tole. Morning to the viewers. The markets opened softer this morning. We are seeing some sectors tracking those global gains. We're seeing the mining sectors stocks tracking those gains. We've got Anglo up, you've got Kumba up, you've got Sanlam up as well. Actually, Sanlam is down marginally, but what you're also seeing is some of the sectors are performing a little flat. We saw Tencent trading up in Asia session, and we expected that to be filtered through to Naspers and Prosus. That in early trade is filtering through quite marginally at this point. You've got guys like Sasol that are trading up in early trade. The top 40 itself is trading down. We're still below that 68,000 points mark. Fairly flat compared to where we've come from, considering that last week we were near that 70,000 points mark. So it'll be interesting to see how the trading session plays out today.
Let's talk commodities for a bit here, Jimmy. They seem to be stabilizing in early trade amid market optimism after the expected halting of hostilities in Ukraine. And I use these words very carefully because Russia is simply saying that it will withdraw. That doesn't mean that that withdrawal has started to happen. Talk us through these developments.
Absolutely. The Russia-Ukraine situation is still a very fluid situation, and the market is reflecting that. I mean, you see that the price of crude is still sitting above the $100 a barrel mark, close to $110 a barrel. We saw gold yesterday sharply retreat below the $1,900 an ounce mark, but it's sitting at $1,925 at the moment, and it's sort of not giving any long-term direction just yet. Again, waiting to see how the Russia-Ukraine tensions develop and play out. And as I said, because of the fluidity of that situation and the fact that we can get a resurgence in the invasion, or Russia could take their time to pull their troops out. At the moment, the market is taking a very tentative and cautious approach towards that situation.
Let's talk about the South Africa private credit, which grew 3.62% year-on-year in February of 2022. What does this data tell us, and why does it matter?
So essentially, this is data that reflects the amount of borrowing from the central bank to other public institutions, being the government, as well as commercial banks, being your ABSA, Standard Bank, and so on. So this rate basically reflects the borrowing rate from the central bank to these institutions, and it is somewhat of a measure of confidence of the economy because it reflects domestic borrowing, and the end result of an increase in the money supply in that respect is that there should be a decrease or an outflow in international monetary reserves. However, because the data is fairly skewed, it doesn't necessarily represent overall recovery of the economy just yet. I think if you look at the data, you'd have to look at whether or not it trickles down and affects the consumer, and there's a positive effect on the consumer having an increase in supply or debt supply within the economy. And given yesterday's unemployment figures, that doesn't necessarily speak to that. So the unemployment figures are not necessarily lining up with private sector credit figures. And the private sector figures where they stand are January 21 highs, but still a long way off of pre-COVID levels if we compare them to your pre-COVID numbers. So while the data is slightly positive, I would caution against considering it to be a sign of a significant recovery just yet, particularly with employment numbers yesterday.
Yeah, Jimmy, I'm going to ask you to perhaps be slightly brief in your last answer there. The sound to you not holding up well. Let's conclude the conversation with the CAP Industrial Holdings publishing its operational update and trading statement. Talk us through how their numbers are looking.
So Cap Industrial published numbers on their different business units. Most are performing steady and stable. Some have seen a decline in terms of demand and performance, and that Cap has said is as a result of the fact that the second half of the year is usually a slower half for them than some of their first half of the year performances. They did manage to get their Piet Retief plant online, which has increased their production by 14%, and they're expecting that their headline earnings per share and earnings from continued operations will be up by at least 20% or more, and we expect those results to be filtered through soon.
Jimmy Moyaha, thank you very much for that markets update. Always a pleasure talking to you.